Hey guys, I had another request to take a look at Hedera. The ticker for this is HBAR, and I'm currently on the weekly time frame. Before I get into the analysis though, I should mention that if you're not subscribed and you want to be able to find this channel again, subscribe and then click the bell and then click on all so you actually get notified when I release new videos. If you like this analysis, but you click away, you might not be able to find the channel again just because, as you can see, I'm only at around 600 subscribers. It's a new channel, and because of that, I'm not really prioritized in the search algorithm, right? So if you like the content, if you find this helpful, just make sure that you click subscribe if you want to get see more of my videos in the future. Okay, so I think it's been about a little over a week since I looked at this, and just to kind of give you a recap in case you didn't watch my previous video, if you're going to trade Hedera, these are the levels that I recommend that you draw. So the first would be this upsloping level of support. So you see it has 1, 2, 3 touches on it. And obviously if the price kind of collapses and comes back down, this is going to be at play, right? So this is going to be a strong level of support if the price makes it back here. So yeah, just draw that, basically connect the bottoms of these lows. And yeah, that's the first trend line. The second trend line is this horizontal one. And I would just basically get your horizontal line tool and just place it right at the bottom part of this wick right here, right? So you see this level here was resistance for about a month here, a couple weeks right here. You know, we kind of came above it on the shorter time frames, but as soon as the monthly candle closed, the candle bodies ended up back below this line, right? So this is why I like to draw a lot of my support and resistances on the weekly time frame, because you know it just kind of prevents fake outs, right? So I know if a candle body closes above this line on the weekly time frame, like it did right here, then a lot of buyers are going to step in, right? Because you know these are the levels that you know a lot of the big money's watching. Okay, and you'll see it was support right here for another about maybe 3 months, and we broke below it. When we broke back above it, it was support again, and yeah, now resistance. This was the resistance level for the last, again, a few months, and we just recently broke above it. So this is probably new. This probably just happened since my last video. So this is really good news. We're back above this line. Okay, now this level here. This is a potential level of resistance. So if we break out of this range here and we head up, expect this level to serve as a resistance. And this is it's kind of a range. It's like 0.089 up to 0.095. So this kind of range right here, because oftentimes the wick will come above it. So yeah, if a candle body closes above here, then that's a good sign. But yeah, if the price comes back up here, then there's pretty good short opportunities. And aside from that, I have right here. So you see the formation that we're making right now. I'll go down to the daily. Maybe you can see it better. So we're basically in this rising wedge, right? Unfortunately it's a bearish pattern, but I mean we haven't broken it yet, right? So yeah, I just marked out this rising wedge on the chart. Now back to the weekly time frame, and then you'll see that I have these two downsloping levels of resistance. Now this first one, it started here. It was resistance here. A resistance here. You see when we approached it, we started forming this doji indecision candle. We eventually broke out of it, came to this resistance and head back down. And as you know, when you have a strong level of resistance, oftentimes the price will come back down and test it as a support. And we did that. You'll see the candle bodies were closing above this line, this former resistance line, for several weeks. And we retested it here. We retested it right here. Right. So this has kind of served this purpose. I don't really need to look at this one anymore. That's out of the picture right now. So then I kind of think to myself, okay, what other trend lines and resistance levels are other traders going to look at, right? So this would be one that's in play. And just to be extra, I mean, some people can draw it from the bodies, and if you draw this from the bodies, then we already broke out, right? I'm drawing it from the wicks because I know some traders are drawing it, and this is the level that they're looking at. We have 1, 2, 3 touches on the wicks right here. And just recently, we've broken above it. Okay, so this is considered a breakout, but we do find ourselves still in this rising wedge formation, right? Now, I'm going to take it down to the daily time frame, and what you'll see, actually, we've broken above it. We came to the top of this rising wedge, and now we're retesting it. So this was the level of resistance. Now, this could end up being a resistance to support flip. So I'm really curious to see how the next daily candle closes. If the next daily candle closes green, like a bullish candle formation or even like a doji of some sort, that could be a potential to look for a long position. Now, just to kind of get an idea what kind of risk reward that would give me, Now, I'm really cautious about taking high value positions right now because the market is just like, it's very choppy. I'm seeing a lot of, traditionally bullish formations break bearish. You know, this is just a period in the market where it's chop and they're trying to I think they're trying to just basically accumulate coins, like the whales are trying to accumulate for the next run up, and they're trying to shake a lot of people out. So very frustrating market conditions right now, to say the least. So let's just say theoretically, we know the next candle closed. On for today in the next few hours, this candle body closes above this line, and tomorrow's candle closes. Maybe closes green. If theoretically, let's just say the candle closed right here, I would enter the position. I place my stop loss below this level of support and this horizontal level of support, and I could target the upper range here. So that would give me a risk reward ratio on this trade of 1 to 2.3, which is okay. I would risk 2.97% to potentially gain almost 7% to the upside. So yeah, 6.86%. So that's a trade I would potentially consider if I can't find any other entries, right? I'll look at the other charts and see if my money's best served, have a higher probability to play elsewhere. Okay, so I'm going to zoom back out to the weekly time frame, and let's just take another look at the macro here. So this price action's not bad. This can be a potential double bottom here. I mean, this one's higher. We basically had a low, then we put in a higher low. So this could be the ultimate bottom in this cycle. A lot of the times when I want to see how the price is responding, I'll take a Fibonacci and I'll run it from the swing low here up to the swing high, now that we have that in. And as you can see on the weekly, buyers really stepped in to defend this 786 retracement level, right? So the price came below it, but when Sunday evening came around, the buyer stepped in and defended this level. So we had multiple candle bodies close above this 786 level. So I mean that's a positive sign. Another thing that is quite bullish to me that shows this could have potentially been the bottom right here. I'm going to change the chart, and I'm going to take a look at my oscillators here in relation to the price. So this is a tricky one to spot, right? So you see we had a low, and then we had a higher low. But this oscillator had a low, then a lower low. And this is actually what's called, I've explained what bullish divergences are. They're quite easy to spot, but this one's trickier. This one's called a hidden bullish divergence. Okay, so we had a low on the price, low here, lower low on the oscillator, higher low on the price. Hidden bullish divergence, and now basically in the last weekly candle, we have closed above this very significant horizontal level of resistance. Now, the bearish sign here is we are forming a ascending wedge here, rising wedge. Typically these break bearish, but not always, right? So this could end up, if this holds and then we break this to the upside, then the next level I would look to, then I would definitely enter a trade personally, and I would target this upper region right here, right? Now, you see these lines here? This is basically if this level breaks, and I think this level here is like the 382. If this level breaks, then I'm going to target these levels as potential levels of resistance, right? So to get that, I will take a Fibonacci retracement tool, take it from the top, the swing high, down to the swing low. And you see, this is where they line up. So we have the 50%, the 618, and the 786. And when I get these projections, what I want to see is, do these levels line up? I'll look left and see if I have confluence with the price. So this level right here, you see, yes, I do. It was resistance right here and it was support right here. So this 50%, I expect this to be pretty strong resistance. Next level up, the 618, do I have confluence? Absolutely. This was the support right here, right? And then the 786, do I have confluence? Absolutely. Right here, this price action, this cluster right here. So the way I normally play this, I just play this as like levels on a staircase. So, if we, say for example, if we break this 382, we break through this level, this 382, the next level I would anticipate the 50%. The first time we come to the 50, more often than not, you're going to get rejected. And then I would look down to the 382 as a support. And then we come up and try it again, right? The second time we come up to it, you have a higher chance of it breaking. And now what I would do, I'm on the higher time frame right now, but as the price came here, what I'm gonna look for is, you know, the first time we come up to it, maybe we got slammed down really hard. There was a lot of sellers waiting up here. The next time we come up to it, maybe we're not going to get as strong of a rejection. And then I'm going to go to a smaller time frame and I'm going to look for sort of bullish chart formation. So, you know, we're at resistance, but are we forming a, you know, a bull flag, right? Are we bull flagging? Is it a, you know, bull pennant? Is it some sort of, you know, maybe an ascending triangle, right? An ascending triangle formation, right? So basically the price here will be making higher lows, and then we'll have this, still have this flat level of resistance right here, right? And then, yeah, I'll look for a bullish formation at resistance, and I could potentially take a long position before this even breaks, pending I have the right pattern, and I can have a level that I can easily know if I'm wrong, so I can have a tight stop loss. I can have a tight stop loss even below this resistance if we form a bullish pattern on the smaller time frames, okay? And then it just works like that. If this breaks, I'm going to look for this to be the next resistance, maybe look for a short with a tight stop, and then just, yeah, and then maybe if this gets slammed down, I'll look for this as support. It kind of just works its way up these levels, right? That's just how the price moves. Okay, so yeah, that's just an update on Hedera. Overall, it doesn't look bad. I mean, the market's really frustrating right now. I'm not expecting any crazy breakout anytime soon. I think, you know, we are in a rising wedge right here. So yeah, this is just my range that I'm looking at right now. If this breaks, you know, maybe a daily candle close above here, then I'll look for the upper level that I told you. But what I'm looking at right now, a bullish sign would be a candle body, this candle body defending this level, and then tomorrow's daily candle closing above this level in a green. I want a green candle tomorrow daily, right? If not, you know, then if this breaks down, right, which more often than not these patterns do break down, your level of support if it falls out of here is going to be this horizontal line that I told you to draw, 0.0544. If that breaks down, then this level is going to be a potential support, and then all the way down here, right? And then it's most important. This is the most important support level, right? So you don't want this to break. If the price comes down here, this I really want to see hold, right? Anyway, guys, that about wraps it up for Hedera HBAR. If you're not subscribed and you want to get updates in the future, just click subscribe. But when you click subscribe, you have to click the bell and then click on all if you actually want to get notified when I release these videos. I'm going to do about 2 or 3 of these videos every single day. And one thing to keep in mind is this is a very small channel. And because of that, when you click away, it might be hard to find this again. So if you found this helpful, you might want to subscribe. All right, guys, have a good day. Take care. Bye.